Good morning, everybody. Welcome to our summer BDO property forum. Amazing, so many people here today. Fantastic that you've been able to attend today. I think it's something to do with the draw of the speaker, so I'll introduce Peter shortly. I just want to introduce myself to you. I'm Andrea Hunt. I'm a BDO, I'm a partner of BDO, and I lead our service charge business. We've also got a number of our colleagues in the audience today as well, and all of us will be around after today's event if you do want to catch up with any of us. And you're very, very welcome. Great to see you all. Just wanted to let you know that for the first time we are actually recording this. It's not a visual of us here today, but it is a recording of the slides and of Peter's talk as well. And we're using that really so that you can share this with your colleagues in your organisations, and also to share the link with people that actually can't attend today as well. So if I can just introduce Peter to everybody. I think you're well known by everybody. Peter's been to these events before and provided us with various updates and introductions around the RICS code in particular. So I'm not going to go into any detail. You already know Peter. I'd like you to introduce the talk today. Over to you, and we'll have time at the end for any questions as well.
Thanks a lot. And well done all of you, despite, well, I only just got here, despite the efforts of Govia Thameslink to prevent me from getting here. And for those of you, well, yeah, great turnout. Obviously, you haven't heard me speak before, otherwise you won't come back. As it's being recorded, for those of you who have seen me before, I'll have to watch my language. The RICS Code of Practice, that's what you're all here to hear about. And it's going to become a new professional statement. And that's where the interest is, and that's why I've been doing sessions like this most of the year, with the hope that it would actually be published by now. But for Duncan, who assists on the group, as I chair the group responsible for production of the code, and I'm the lead author for it. To say that I've had to learn the art of diplomacy would be an understatement. Having to deal, particularly by now moving forward as a professional statement, having to deal with all the tenant bodies and the landlord bodies, the BPF, PLA, the BRC, etc. It's been a serious eye-opener, to say the least. And you wouldn't believe how many, very, very small amendments to a code that's been in existence for some long while can cause so much angst, animosity, and everything else between various bodies. Now, what I'm going to do is really go through, do a bit of background, look at how the UK has reacted to the code so far. And then I'm going to introduce, what the new code are, what changes there are, and the impact of it being a professional statement. Now, we've had guidance on service charges now for 22 years. The first guide to good practice was produced in 1996, and I'm the only person currently involved with the RICS working group who was actually involved with that first document. Yeah, I'm only 23, so I was only 23 when I started that, so you can work it out. We've had this guidance in the second edition, the first edition, it came from very much the shopping centre stable. It was all the various tenants who are in shopping centres all over the country. They started thinking, well, I've got a standard requirement for 2,500 square feet, so why am I paying £2 a square foot in Poole, and I'm paying £4 a square foot in Doncaster? It was the multiple tenants who were able to sit down and really start saying, there's such a disparity in the cost, the quality of what I'm getting, the leases and everything else like that. And it was, they brought various bodies together to start discussing it, which ended up with the first guide to good practice. But everyone thought that, then, that it only applied to shopping centres, and it was never intended. So the second edition in 2000 was very much an expanded document. The first guide, I think, consisted of about 7 pages with about 2 paragraphs on each page in large font size, so it just filled the page up a bit. But those sort of statements in that first guide to good practice very much form the basis of the core principles that still carry forward into the code today. 2000 edition was expanded and a bit more sort of flesh on the bones, as it were, but very much aimed and specifically dereferenced for shopping centres specifically, and aimed at all non-residential asset types. And in 2006, under pressure, I think the thing was is the previous guides, nobody owned it. If you wanted a copy of the guide, you'd have to phone up one of the people that was on the working party. And I remember we had boxes of these things under our desks, and if you wanted one, you'd phone me up and I'd send you one. How we got it printed, I can't remember. Who paid for it? I think the first one, I think Boots paid for it first time round, for these documents to be printed. And it was a limited run. I'm sure the copies that I've got, back in the office, are probably worth something now. No, probably not. But 2006, the RICS then, decided that it was appropriate that they took ownership of the document and produced it as a first code of practice. And we've had 3 editions so far, and we've reviewed the guide or the code on average every 4 years or so. So it has always been an evolutionary, not a revolutionary process. And things have developed, and the new 4th edition is simply an extension of that evolutionary process. But how has the UK reacted to the code over the years? Well, it is still, and always has been, consistently in the top 5 most downloaded documents on the RICS website. On average, 500 downloads per month. I had some statistics from the RICS the other day. Currently, it's running at over 1,000 downloads. Now, I hope that increase in downloads isn't because everyone thinks the new 4th edition is actually being published. Because I say there's been a bit of a delay in that. But it's still being downloaded over 1,000 times a month. The code has been specifically referred to in legal judgments. And specific reference to the code is increasingly common now in leases. And landlords are now looking, are expecting the service charges to be referenced to the code, and certainly most tenants, or those informed tenants, are looking at specific reference within the leases to compliance with the code. Landlords are also, adopting increasingly a more customer-focused approach to property management. Land Securities, Segro, British Land, and loads of others now actually include within their asset management strategies customer or tenant satisfaction as a key goal. I'm not aware of any management contracts that are currently entered into which don't oblige the managing agent to comply with the code of practice. I'm sure you'll tell me that you've just done one where no reference at all is made to the code. But clients are expecting their managing agents to comply with the code. And the thing is that treating tenants as customers is seen as being making good business sense. And I don't mean anyone from Land Securities here today? Yeah, I don't mean to offend. But you went through a training program at a time where it was ingrained in it. You have to refer to all your tenants as customers. Calling them customers doesn't make them customers. Treating people as customers is an attitude. It's a state of mind. It's not just a label. But realising, and this is where the property industry has to start moving forward, and this is where the MRICS is taking a serious lead in this, is that we are providing a service. In the past, I think historically, the surveying profession or the property industry has held itself rather aloof. And I'm a landlord. I remember years ago working for the Prudential when it was the 3rd biggest landowner behind the Crown and the Church. For anyone to criticise the Prudential was considered to be outrageous. It was almost like committing treason you know, against the crown, or, you know, sort of doing something against the church, you know, with a credential. How dare you say it? And this is the attitude that a lot of landlords have. Understanding that we are providing a service, as you know, has got to be accepted. This is what tenants want. You know, they're paying money, and it makes, as I say, good business sense. Again, going back years ago, Martin Moore, who was the CEO at Prupin, you know, set out his stall that he wanted the Prudential at that time to be the landlord of first choice. And I think British Land and Land Securities are now taking that attitude, that when you've got so much competition in the market, you've got to set yourself out as being a good landlord, not a benevolent one, but one that listens to tenants, reacts to tenants' needs, provides the services that they want at a, you know, value for money cost, because you want them to come to your building rather than your competitor's building down the road. And that's what it's all about. You know, it is becoming, you know, the market it's not becoming easier. It's not becoming less cutthroat. You know, and that's one of the issues. The thing with service charges, though, and there are some key concerns, but there are still problems with people being, you know, with this lack of transparency. You know, you've heard the old mantra, you know, when you're dealing with tenants, when you're dealing with service charges, you're spending the tenant's money. And that is an attitude, you know, that's a frame of mind that has to be accepted. And therefore there has to be transparency when you're spending somebody else's money. And we also have to understand that we, you know, in dealing with service charges, we are very often dealing with what can be, for some tenants, a large part of their business overhead. And to then delay issuing budgets so they themselves can't budget for their business accounts is just wrong, you know, and it does not help our tenants. And to delay issuing service charge statements at the end of the year, some might say, you know, even if there's a balancing charge due, the tenant has to factor that into his business accounts, and to continually carry forward a contingent liability because the landlord hasn't told him how much he's owed, you know, is just unacceptable. And similarly, the other side of the coin, where there is a large credit due back to the tenant. You know, I've known of businesses to go, you know, into administration where they were owed a lot of money by the landlord, and if the landlord had simply, you know, produced the credits on time, that tenant may not have gone into administration. And because, you know, it was the landlord that caused some major cash flow problems. I remember years ago discussions with Marks and Spencers, and they said, you know, it was as bad to over budget as it is to overspend. And they then explained that they were getting fed up with landlords over budgeting and then giving them back loads of money at the end of the year. And for Marks and Spencers over the UK, it you know, amounted to a serious amount of money. They said if we had that money, if the various landlords hadn't been sitting on it, and we'd had the money, we could have bought some new stores, refurbished stores. So cumulatively, particularly for you know, sort of multiple tenants, you know, these delays and problems that we as an industry create for our tenants really does have a potential, well, does have an impact on them. I just put this one up. It doesn't probably come out too well on such a small screen. That video refurbished. It all looks lovely, but the screens are small. I don't expect you to look at it. This is something that Property Solutions produce in their score report every year. I'm not doing advert for Property Solutions, but one of the things that the score report looks at, apart from looking at, similar to the JLL Oscar report, looks at service charge costs. And rates per square foot. One of the things that this does that the Oscar report doesn't do is actually look at the performance of managers in compliance with the code. And so therefore it's, you know, have budgets and statements of actual expenditure being produced in accordance with the code, you know, the time limits for the code and everything else like that. The problem with this, and this is what this graph demonstrates, is that we have very, very little up here, sort of 80, 90, 100% performance. There's too much down here in this range here, 30, 40, 50%, and the top line is on each one is the most recent. Well, it's the 2016 figure. I haven't bothered to update this for 2017 because it only makes for more depressing reading. As you can see, some of the performance is actually going backwards. So the industry is not. There are instances of excellent adherence to the code of practice, but there is too many incidents of people simply deciding to ignore it. And one of the issues actually around looking at the fourth edition and the professional statement was a comment made by one very large agent was, well, why does it have to become a professional statement? Because we like to dip in and dip out on occasion. Well, what's the point of having a bloody code of practice if people decide to dip in and dip out? It's just an outrageous comment to have made, but it was made anyway. So I want to touch also on BDO were great 2 years ago when we were looking at the revised, introducing the fourth edition. And together with the RICS did some surveys of basically BDO's client base, predominantly managing agents and some clients. And just some results here of what came out. Despite what I said about people wanting to dip in and dip out, the respondents all said, 100% of them said they seek to comply with the code. On occasion, I do actually see some statements being produced by managing agents. I can say that whilst 100% of respondents seek to comply with the code, 100% certainly do not comply with the code. 83% of respondents found the guidance on accounts disclosures was clear. And of course, the survey was concentrated on the accounts issues, so you'll forgive me for that. 36% of the respondents found the implementation on disclosures was straightforward. 73% felt they added value. But 50-50, it was a 50-50 split as to whether these disclosures actually had an effect on the tenant challenges. I suspect it was actually probably early days. If only 36% of the respondents found the implementation of disclosures straightforward. I was surprised at that, because a lot of the disclosures is making basic statements like the building was VAT elected on such and such a date, and therefore all the figures that we're quoting to you are net or net of VAT, and VAT will be added onto your bill at a later date. You should know whether you've VAT elected your building or not. Anyone dealing with a building, you don't know if it's VAT elected. I didn't think her hand would go up. So, but you should know that. You should know the date on which you was elected. You should know whether or not you're dealing with the accounts on accruals or a cash-based system. Most of us do it on accruals. But to make that statement means that anyone reading the document, firstly, if they know it's VAT elected, they know that all the costs are net, and therefore they can compare it with another building. And if they are comparing it with another building that's not VAT elected, you know there's going to be a 20% difference in the cost straight away. So you can compare. And if it's on an accruals basis, for instance, rather than a cash basis, again, you know that it includes all of the costs for the 12 months rather than maybe 11 months worth of electricity costs, because on a cash basis, and if you haven't paid the December bill yet, it wouldn't have appeared within that period. So it's important that these sort of disclosures are made so that people can understand what's being provided to them. In terms of management fees, and this was a worry, only 82% of respondents said they separately disclosed all of their fees that they were being paid. Go back to the transparency issue that I mentioned earlier. In terms of forward funding, 73% of respondents had an accounting principal note for forward funding major projects. 70% of respondents use sinking and reserve funds, which was interesting, because if you speak to a landlord, they will say, oh no, we don't do sinking and reserve funds, I haven't done them for years. Apparently 7% of the respondents in this survey said they used them. And then there was the big worry, the huge worry, that 100% of the respondents retained monies that was collected in 1 year for major works, even if the works weren't carried out. And retained the money, and then called it an accrual, kept the money when they issued the statement to the tenants. I'm not going to bang on about it too much, but I can't let this thing go without ever mentioning it. for those of you who aren't aware, an accrual can only be made when you've incurred a liability, but you haven't yet actually paid the bill. So it might be something like, you've placed, this a major works contract, the last bill comes in, and it's not what you expected. The contractors used the contingency fund, for instance, or PC sums without authority. So you're disputing the bill, so you haven't paid it. But you've incurred a liability because the work's been done. Well, what you would do is you would accrue, including your service charge accounts, the amount of money that you think ought to go in there, the figure that you ought to pay, but you haven't actually paid it yet because you're still arguing the toss with your contractor. Okay? Or you get to the year end and the electricity board haven't yet sent you the December bill, there's a delay and you keep on asking for it, they still haven't sent it to you. Well, you look back at the previous years and say, well, December it used to be 10 grand, so we'll accrue £10,000 because we know we've got incurred electricity costs, and we'll adjust once we get we finally get the bill in and finally pay it. What you can't do, or rather, if you've budgeted for major works, and then for some reason those major works were not carried out during the year, you can't then go around placing the order on the 24th of December, just before you pack up for the half day to go down the pub to enjoy the festive drinks and everything. You can't place the order and say that we've incurred the liability, because all you've done is place an intention to do the work. If you haven't incurred the liability, so the work hasn't been done, and you retain the money on the pretext that you have done the work, i.e. as an accrual, let's be very, very honest about this one. You are lying. You are retaining money which is due back to the tenant based on a lie. Anyone want to tell me what that is? Come on. No? It's fraud. Okay? It's criminal fraud. So don't do it. But 100% of the respondents in the BDO survey said they do it. That's not very clever, is it? In terms of cash reconciliations, 70 people said they thought that cash rec or improvised balance sheet should be included in the service charge statements. So you can see there's a bit of a mixed bag there as to compliance, misunderstanding, and and it surprised me that with guidance being available for over 22 years, that there is still these issues and these misconceptions about what service charge should and shouldn't be. So I'm going to touch on very, very briefly now is just a few words about the RICS and why the RICS are looking to make this a professional statement and what the impact is of making it a professional statement. This is an article that appeared in the States Gazette last week, 26th of May. And the headline was, RICS Director, we are not a members club. And that's one of the things that I just want to quickly touch bases on. The RICS is not a members club. It is an institution under Royal Charter, and it is a regulatory body. It is one of the few bodies that are still regulatory. All of the other organisations that are involved on the working party, the BCO, the BPF, and everyone else, are trade associations. They are there to look after the interests of their members. The RICS is different. It is a regulatory body, as I say, under Royal Charter, and its aims, it's a global organisation. Its aim is to regulate the standards of professionals within the property industry, and it has a duty to uphold the public interest. So this is all part of the Royal Charter and its objectives that flow from that. It has regulatory responsibilities and it operates an independent disciplinary process. The difference, for instance, use the Law Society. The Law Society used to be a regulatory body. It failed to regulate its members and therefore it lost that regulatory power, and there is now a separate body that now regulates lawyers. We don't have that. It's the RICS that regulates the property industry and everyone involved with it. And that's an important distinction. So the fourth edition is to appear, is to set the highest standards of professional the highest level of standards, recognising the demand in the market for those standards in the management, administration and service charges, the 4th edition is to be published as a professional statement. A professional statement, for those of you who aren't aware, is a document that provides members with mandatory requirements or a rule that members or firms or regulated firms are expected to adhere to. In terms of the timetable, I'll get onto the detail in it. Public consultation took place last year, back in last year in December. The hope was originally to publish in April, but as I said, the issues that have come out of the public consultation have been widely varied. We had over 3,500 responses on the public consultation. It has to be said, a lot of it was tenant from tenants who simply cut and paste the same comment, which was made by a particular firm of service charge consultants. No names, no factual there. But it is simply regurgitating the same mantra all the time, which was, okay, it got a wealth of, it got over the message that there was a lot of people who felt the way they did, but having to wade through that 500 times was not a pleasurable experience, I have to admit, because I had to read all 3,500 bits of feedback. We're now looking to publish in later on this year, late summer, early autumn, with an implementation for March 2019. So what about professional statements? Well, they contain sections that, where members are expected, recommended best practice. And it includes words such as must and will. Where members depart from those, they should only do so with justifiable good reason. And when judgment of the professional member, there has to be a departure, which will have a material impact on the surveyor's advice. The client must be informed in writing. Now, this is quite important, because what a lot of the stuff that we've had, and certainly it's coming out from the consultation process, is, well, how can I could be held up for disciplinary proceedings before the RICS for failure to comply with the code, when my client gave me clear instructions that they wanted to do something in a different way. Well, the important thing is that, and this is, I think is crucial for the surveying profession, is that we've got to start acting as professionals and actually advising clients rather than clients telling us what should be done. Okay, that's what we as professionals should be doing. You do not go to the doctor and tell him how he's going to treat you. Okay, you don't do it. Would anyone do that? You don't. The doctor advises how you should be treated and what you have to be done, whether what procedures you have to go through, what medication you should have. You may not always agree with it. You may want to get a second opinion on occasion. But it's the doctor that's advising the patient. And in the same way, it should be the surveying profession that advises clients and not the other way around. So it's important that where a client does ask you to divert from the guidance set down by the code, that you then write to the client formally and say that this is what I'm expected to do, this is what my professional body there, I will do what you ask me to do, but you make it very, very clear what should be being done. And obviously make sure that anything your client is asking you to do doesn't go beyond the bounds of what is reasonable or legal or anything else like that. The RICS considers that professional statements are technical standards for the purposes of Rule 4 of the Rules of Conduct for members and firms, and as a result could have legal or disciplinary consequences for departing from professional statements. So things are being racked up a little bit. This is now becoming serious. You have to comply, basically. The core principles remain unchanged. So if you look at how many of you aren't familiar with the 3rd edition of the code? I take it you're all familiar with the 3rd edition. And if you look at the 4th edition and compare it with the 3rd edition, you won't, just go, "Wow, that's different." it's set out in very similar, well, in the same way. A couple of additions in terms of the statements about, what a professional statement is, and these mandatory requirements. But otherwise, and there are some changes which I'll go through in a second, but it'll be very familiar to you. It hasn't changed a huge amount, and the core principles stay the same. Is everyone aware of the Prince's House versus Distinctive Clubs case? Anyone not? Oh, quite a few did. I'll just quickly touch on that then. This was a case that involved the BAFTA building in Piccadilly, hence the graphic. It's very difficult to get a picture of the BAFTA building in Piccadilly without having a bloody great big bus in the way, so I had to go for something else. This involved a case where the landlord was seeking to replace the roof, and he also sought to carry out some works to a skylight. Colleague of mine when I was at Savills, Ed Shaw, was actually involved in this case. He was the building surveyor acting for the landlord, and when I asked him, how it went, his summary of the case was the operation was a complete success, but unfortunately the patient died. This is where the landlord, the tenant was challenging the reasonableness of replacing the whole roof, suggesting that patch repairs should be done, and it was challenging the necessity for carrying out works to the skylight. The judge, Jonathan Gaughan, at Falcon Chambers then, QC, was sitting as Deputy High Court Judge, found that it was reasonable for the landlord to carry out works to the roof and to replace the roof rather than continue to do patch repairs and just have to go back up there the next year and everything else like that. And he also held that it was perfectly reasonable for the landlord to have carried out works to the skylight whilst he was there doing the roof. It was, there was a slight element of preemptory work being carried out, but it was reasonable for him to have done it. But, and this was the but, the tenant, when he took the lease, had a cap on his service charge for the first 5 years of the lease. Everyone knew that the major works to the roof had to be required, and it's a strange one why the tenant actually tried to argue that the landlord shouldn't have done the roof, because the tenant actually had a report done that said the roof was knackered and needed to be replaced. So everyone knew that the work had to be done. But the tenant and the landlord procrastinated, dithered, messed around, buggered about, did all this thing, and then carried out the works after the tenant's cap had expired. And Jonathan Gaughan then said, basically, no. The landlord was under a covenant to use reasonable endeavours to provide the services and hadn't used reasonable endeavours to carry out the work in a timely way, and therefore the work should have been carried out when the tenant's cap was in force, and therefore the tenant's liability was limited to the amount of the cap. What he then did was added a coda, a commentary on the case at the end, which is fairly rare for judges to do. But basically what he said was, and he described it as a recipe for more unproductive litigation has yet to be devised. I paraphrase only very, very slightly. He said this is a case that involved, firstly, a managing agent who did not bother, nor did he think it was his job to read the lease. Secondly, a landlord who, despite the propriety of doing so and the advice given to him, decided to include everything into the service charge, whether it was recoverable or not, which led thirdly to the tenant getting a bill 4 times more than he was expected to receive, without any explanation or justification as to how that turn of events had come about, which led fourthly to the tenant digging his heels in and taking issue with everything the landlord did because of what he saw as the landlord's blatant unreasonable behaviour. He then went on to say that tenants who, and I'll paraphrase this a little bit, tenants who agree to pay a service charge rely upon the professional people involved performing their roles with professional scrupulousness, diligence, integrity and independence, and not in a partisan spirit, supposing their only task to be to recover as much money as they can for the landlord. That statement is in the code. It has been for the last 3 versions of the code. It's in there because that underpins, that basically says this is how you should be dealing with service charges. And it's amazing how many people choose, firstly, to avoid the professional scrupulousness bit, but the diligence, integrity. And the code doesn't refer to independence, it refers to impartiality. because it's an acknowledgement in the code that when you're instructed by one of the parties, i.e. as a managing agent you're instructed by the landlord, you can't truly say that you're independent, but you can act impartially. The aims and objectives of the code remain exactly the same, and it's about improving standards, ensuring timely issue of documents to tenants, reducing the causes of disputes, and providing guidance to everyone involved, all of the stakeholders in the whole process in terms of the operation of leases and the drafting interpretation, all in accordance with best practice. As I mentioned, a professional statement includes these phrases, that practitioners must or will comply with certain things. So I'm just going to go through what the new mandatory requirements are. And incidentally, where the code is currently, it is in its finalised draft. I'm not making any more changes to it. So if anyone wants to write to me saying, we've seen a copy of it, we think, you should insert a comma somewhere. And believe me, I've had comments like that. I ain't making any more changes. I'm just not doing it. It is now currently with our ICS regulation to get regulatory approval, because at the end of the day, the RICS have to be, there's a separate board, has to be confident and satisfied that if this is issued as a professional statement, it is capable of being regulated. There's no point in putting out a professional statement that can't be regulated. So these principles, there's 9 of them. All expenditure a manager must seek to recover must be in accordance with the terms of the lease. Right. Seems a pretty obvious statement to make, but go back to the Jonathan Gaunt comment, when the managing agent didn't even bother to read the lease, you can see why it's necessary to make that statement. Subject to Section 2.7. Section 2.7 refers to situations where you have fixed amounts or fixed percentages stated in the lease. Okay. Managers must seek to recover no more than 100% of the proper and actual costs in providing and supplying the services. As I say, Section 2.7 refers to where there are fixed percentages. Sue will remember, back in the day at the Pro, Manders Centre, Wolverhampton, had fixed percentages, what the centre I was involved with, had fixed percentages, the total of which added up to 134.24%. But there's nothing you can do. They were fixed in the leases. And as each lease is a separate contract between the landlord and that individual tenant, there was nothing that could be done about it. Realistically, the landlord, the Pro didn't write these leases. It was Manders Paints that wrote the leases, but they took the view that the service charge was actually a matter of negotiation in the same way that the rent was. Strange. So there's a caveat there, only where you have fixed percentages, which the code says you shouldn't be granting anyway nowadays. So it's really just to cover historic situations. Owners and managers must ensure that service charge budgets and explanatory commentary are issued annually to tenants. Some people have viewed this as a bit of a backward step. The code currently says that it should be issued at least 1 month prior to the beginning of the year. Well, the thing was, in terms of regulation, what we don't want is for someone to be, sort of held up for disciplinary procedures because they, is a month a calendar month? Is it 4 weeks? And we don't want to get silly where people, produce a budget 1 day late. It just gets silly. The principles, though, the core principles, and I'll get onto those in a second, still state that the budget should be produced 1 month prior to the beginning of the year. But what we're saying is that the mandatory requirement is that no less frequently than annually. Okay, and similarly with the statements of actual expenditure, they must ensure that they're issued annually to tenants. Again, the code says best practice is within 4 months of the year end. Next one, owners must ensure that service charge enforcement matrix is provided for tenants. This has got to be a must. A lot of landlords don't like providing enforcement statements to tenants. Why not? Perfectly reasonable, I think, that the tenants know how service charge is calculated. and how particularly their service charge is calculated. Just by saying you occupy 10,000 square feet, the percentage is 100,000 square feet, therefore your percentage is 10%, isn't good enough, because you need to have all of the detail of all the other units. The reason why most owners don't like giving apportionment matrices out, because invariably there's something in there where they're over recovering, or somebody's got a special concession that is being spread amongst all the tenants. So again, it's about transparency. Service charges, including sinking and reserve funds, must be held in one or more discrete or virtual bank accounts. Interest, any interest that is earned, doesn't mean that you have to earn interest. Yeah? There's no obligation for you all of a sudden to go around and find an account somewhere that's actually paying interest. How many people are getting interest on their business accounts currently? Not many. With interest rates at what, 1.5% or whatever it is? I've checked recently. I don't bother anymore. But if interest is earned, it must be credited back to the service charge. Interest earned on service charges or sinking funds or reserve funds is not bunts to the landlord, basically, is what we're saying. Yeah. When acting on behalf of a tenant, practitioners must advise their clients, if in the event of a dispute, that if they're going to withhold anything, it must only relate to the actual sums in dispute. There's none of this, I'm disputing, a couple of grand's worth of work, but I'm going to withhold £100,000 balancing charge. That is one of the major issues that managing agents and landlords suffer in terms of cash flow by tenants simply withholding these costs. And similarly, on the other side of the coin, when acting for a landlord where a dispute exists and it's found that the tenant is owed some money back, then a practitioner must advise their clients and get that adjusted without any undue delay. We're pretty good at, once we've proven the point that the tenant owes us money, and then chasing the tenant to get the money off the tenant. But if the boot's on the other foot and the money's owed to the tenant, then it should be paid over pretty quickly. They're the mandatory statements. The rest of the document, which you'll be, as I already said, you'll be familiar with, are the best practice principles, and those best practice principles underpin and support the mandatory requirements. And therefore, it's important that when you see the published document, not just simply to look at the 9 mandatory requirements and think, oh, I've ticked all those, I've done that. The whole document is the professional statement, not just those 9 mandatory requirements. So it's important that you read the whole of the document and comply with the whole of the document. Hence why I go back to the minimum requirement is to produce a reconciled statement annually. The best practice requirement is within 4 months of the year end. Okay, so there's been no watering down of the old principles, just as we had to highlight these mandatory obligations. Obviously, we can't make everything mandatory. For instance, when you talk about communication, define communication. What can you put a minimum level of acceptable standard for communicating to someone? I don't think you can, and therefore you can't regulate that. Yeah, so there's a lot of stuff there that is not capable of necessarily being regulated as to say you didn't do this, therefore you're going to be disciplined or sanctioned in some way. But you can take the whole thing as a whole and say whether or not you've complied with the practice statement. Some of the amendments to the supporting principles, in terms of total cost of management, there's now it's required to be transparent over additional or supervisionary functions. It's this whole thing about introducing FMs. I know people give them different titles and stuff like that, but it's introducing these additional tiers of management between the on-site team and what is seen as traditionally the property manager role. All tenants see is more people doing more stuff at more cost, not any increased quality of service. Now, we all know that the reason why FMs are employed sometimes is because the property manager cannot make enough money, or he's sharpened his pencil so much, his margins being so squeezed that he cannot afford to resource the property management function. And therefore introduces an FM, which basically and devolves half the responsibilities that was traditionally given, fulfilled by the property manager, to the FM. Well, if you've done that, that should come out your management fee. If you've got your management fee wrong, I'm being recorded, aren't I? Tough, right? Just tough, but tough. Get your management fee right if you expect to actually perform the role in accordance with the professional statement. So there's this issue about, what is in place of or in support of. I suggest if I employ someone and then just delegate as a property manager, half my responsibilities to that individual, then that's in place of me, and therefore, that cost should come out of my management fee. If, however, I need a specialist survey done, asbestos survey or specialist health and safety survey or anything else like that, that's not a skill that I would have, not a skill that would necessarily be, embraced by the property management fee. That's an in support of cost, which would be an additional cost of the service charge. It's about being clear and explicit on those sort of issues. It's now, property managers are now obliged to provide a summary of the management contract and the services that are being provided under the management contract, and the costs and fees payable to the service charge. Again, management is just like any other service that's being provided to the tenants, and therefore there should be complete transparency as to what that service is and what the cost of that service is. And again, it goes back to this, the issue about sort of landlords, if they want additional services, like on a shopping centre, they want to have a look at a tenant mix strategy or any asset initiatives, or they want the managing agent to do other issues, things like rent collection, dealing with tenant applications and everything else like that. They are matters between the landlord and the managing agent, and therefore there should be a separate fee. They are not matters which relate to the service charge, and therefore the costs of dealing with that should not pass down through to the tenants. We've clarified the issue because it's an issue that has been raised. Caps on management fees, subject always to what the lease says, but generally a cap on a management fee is, we're saying that would normally refer to the fee payable to the manager and does not incorporate or encompass the on-site management costs. Okay, there's been a few arguments recently where management is being, where there was a cap on management fee. People have been arguing that management encompasses anyone who has any sort of management function at all, and I think it's always intended, as I say, subject to what the lease says, that's the manager's fee and not the on-site costs. There's to be transparency over other income and related income to the manager and related entities. Therefore, JLL, CBRE, everyone else who's employing, who's bought M&E contractors and facilities management companies, and then, funnily enough, all the companies that are now, all the contractors that are now servicing the property are owned by the manager. Right, there's got to be complete transparency on that, and you should reveal quite openly and transparently what fees you're getting from that. And I say in related entities, so where you've got sales, for instance, and sales management services, the staff, there should be transparency as to what fees are also being charged in terms of managing those staff. There should be transparency over the apportionment of costs, where staff perform functions at different properties, and where the staff fulfil functions which are unconnected with the provision of services, there should be transparency in that, and there should be an allowance made. So if you've got a centre manager, for instance, or centre director, what's the difference? Anyone tell me? You've got a centre director, it's titles, isn't it? It's going to be senior vice president retail. But where you've got a centre director or centre manager and you're doing a refurbishment, and that individual is doing a lot of work and a lot of time working with the professional team, doing what is a landlord's refurbishment, costs that aren't going to go through the service charge, then it should be acknowledged that he is acting, and working for the client on something that the clients wouldn't do that is not necessarily a service charge activity. These guys now, because they're different from the old building manager that you had 40 years ago. They're doing different functions, but it's got to be clear as to whether what they're doing relates to the service charge or something else. Further guidance, I've already touched on it, on costs that should be borne by landlords. Landlords must be bearing the costs of rent collection and asset management. And in terms of management contracts, there should be 2 fees. Let's get away from this management contract with one single fee. The client turns around and says, yeah, and you can get all that back off the tenants to the service charge. No, right? When you're fulfilling as a manager, when you're doing stuff for the landlord, which has got no connection with the provision of service to the tenants, it's a separate fee which should be set out in the management contract. I dealt with an arbitration recently where the arbitrator actually awarded a 12.5% reduction in the manager's fee to reflect various items like rent collection, dealing with tenant applications, a whole myriad of stuff. Because what was accepted, that this had nothing to do with service charge. That arbitrator is now a High Court judge, Nigel Fancourt. He's now a High Court judge, and without a doubt, if there's going to be a service charge dispute, he's probably going to get them because he's very experienced on service charge matters. So that's this was an arbitration, but it's a view of a High Court judge. Okay, that where you do have these services managers do not, as they keep on claiming, do it for nothing. Hands up, medium managing agents. Right. Keep your hands up if you're a charity. You're not a charity. You don't do stuff for nothing. You do it to make a profit because you've got shareholders and everything else. You don't do things for nothing. It's as simple as that. So let's not kid ourselves anymore. There's a revised definition of value for money. Additional guidance on the basis and provenance of floor area measurements. Where a full apportionment matrix is provided, there's an obligation on the tenants, so far as they are able, to check and verify that those details are correct in respect of their own premises. Because when you're giving the matrix to someone, you're saying, and for years you give the matrix out and say, this is how we've calculated it, for them to 6 years later turn around and say, there's a mistake on my floor area. I want to go back, I want you to recalculate, but go back over the next 6 years. Defeats the whole object of the industry being transparent. If you're transparent and then, then somebody allows that mistake to build up, we really shouldn't have to then penalise the landlord because he can't go back and recalculate everyone else's. There's not saying that you're forbidden from doing it, but there's a recent case a residential case where a tenant had been paying for years on a service charge apportionment on a basis that wasn't strictly in accordance with his lease. And the court was there, I think it went to the upper tribunal, they said, no, there's an estoppel there, you've accepted it, you've known exactly how it has been calculated, you didn't raise it, you didn't object to it, effectively you were stopped from then claiming that it's incorrect and going back loads of years. Yeah, I think that's a common sense approach. In terms of financial controls and competence, this is an area where Duncan has been phenomenally helpful in coordinating and liaising with the ICAEW. We've changed things, we've sort of modernised some of the language, and rather than talk about this archaic thing of certification, we now talk about approval of service charges. It still means that the managing agent should approve it, and get the service charge account backed up by an independent accountant's review. And there's a reference, when I go back to the BDO survey that I mentioned earlier on, there's reference that openness and transparency can be enhanced if you include a balance sheet or rec, but that's certainly not a requirement at this stage. There's additional a number of information papers that I've been stupid enough or fortunate enough, whichever way you want to look at it, to write over the years, have now been incorporated within the professional statement. So the handover procedures guidance note that was issued a few years ago, that's now incorporated. And incidentally, one of the main advantages or benefits, whatever, this year in the latest edition of the code is it's now being formally endorsed and supported by the Law Society. By including the handover procedure notes within the professional statement, which, and I don't know if any of you have read it, it sets out sensible, what you should do sensibly when handing over a property, either on a change of managing agent or a sale of a property. It sets out everything you should be doing in terms of and the timescales for handing over all the information, because that's a huge area where there are concerns. But of course, one of the big issues is it would make life easier for us as surveyors or managing agents if the sale contract actually reflected what the guidance is, rather than just saying, yeah, we know there's a service charge, sort it out one day. So now that the Law Society is supporting the professional statement, handover procedures now incorporate that, I would expect them to see more lawyers having regard to that in terms of looking at sale contracts. And the other thing is, of course, is that in terms of management contracts, you should now be thinking about complying with the handover procedures and therefore making sure that in your management contracts there is an exit strategy when, there's not an if, when you eventually get this instructed. Because all management contracts will end. Because the client will sell, you'll do something silly, which means that you're effectively sacked, or the client will sit there and say, I've had this managing agent on board for 10 years now, I need a new set of eyes to move the asset management way. That always happens. So all management contracts end. But management contract itself, very rarely in my experience, actually says, what do you do when the contract comes to an end? Because you get a phone call that says, John, we exchanged contracts on the building last week. Couldn't tell you because it's all secret. Always, isn't it? It's project something or other. And you're off the case next week when we complete. And that's it. You're off. You ain't getting paid anymore. Yet for months afterwards, people will be asking you for all the service charge information, but you're not being paid anymore. Client's not paying you because he's got rid of the building. The management contract should take that into account and make sure that there is a run-off after the sale or after the termination of the management contract. There should be a run-off to enable you to provide and set up and effectively reconcile the service charge and provide all the information to the new managers. Guidance on dealing with disputes increased a lot. We've gone away from court action and arbitration, very much focusing now on mediation and especially independent expert determination for dealing with service charge disputes. Mediation, there's a place for mediation. I don't necessarily think mediation is right in all situations of service charge disputes. When it comes to things like apportionments and things like that, I don't think you can necessarily, I think it's dangerous to mediate that. What you need is an independent third-party determination. Clarification around what actually constitutes a dispute. A dispute is something that is between the landlord and the tenant, okay, under the contract that's been entered into the lease. A dispute where a tenant can withhold money is not about the performance of the managing agent because he didn't get the service charge issued within 4 months. That's not a dispute. That is an issue of performance of the manager, which is where, as a professional statement, if you've got an issue of performance with the manager, you either raise it with that company through their complaints procedure, and if you're not satisfied with the answer you get, then you raise it with the RICS as a failure to comply with the professional statement. It is not grounds for a tenant to dispute liability to pay a service charge. That can only come from a dispute under the terms of the lease. So we're giving more guidance around that. But as I said, we mentioned that there's the complaints procedure that should be followed. There's additional guidance on dealing with major works. Already mentioned accruals, more guidance about that, and clear statements to what is, and more importantly, what isn't an accrual. The information paper on sinking funds and reserve funds, again, has now been incorporated within the professional statement as industry best practice. We've revised the social, economic and environmental sustainability chapters. We've included references to MEES, etc. CRC is mentioned still, because it has to be, although there might be one revision, actually, that might happen to the code before it actually gets published, because CRCs is, no, it won't be. CRCs disappear off the face of the planet in 2020. We've made a comment that, yeah, this is only low, but there is guidance in there in terms of what we should be doing there. As additionally, Chapter 10, Section 10, always related to special or additional guidance for shopping centres. That's now been extended to include retail and leisure parks and business campuses. Because it's seen that a lot of sort of facilities and amenities that were traditionally provided in shopping centres are now increasingly being provided at leisure parks, retail parks and business campuses. You go to business campuses, it's ubiquitous metal table tennis table. It's those sort of things which you wouldn't normally associate with a standard office building. The services being provided there, and again, you just have to go to Regent's Place or loads of the Broadgate, go to Broadgate, and there's activities, all this other stuff that's going on, a little bit like events and entertainments that you get at shopping centres. Well, rather than being aimed at the shopper, these are being aimed at the occupiers, and therefore it's for the benefit of the tenants and their staff. So therefore we've included that sort of guidance in there. So finally then, implications for the property industry. Again, a couple of quotes which I just get out from that article on the 26th of May. It's happened to be Simon Pritchard at Gerald E. But this basically encapsulates it. It's being self-regulated, it's important the RICS remain vigilant and that firms also play their part, stick to the rules and enforce appropriate behaviours. This is why the code is now becoming a professional statement. But he did say, and I totally support it, major UK general practice surveying firms at executive level, there's a genuine desire to act and behave appropriately. But if we don't, regulation will be imposed upon us. You can see that in the residential sector where the government has got so fed up with how residential managing agents act. They've now brought in specific regulation that you have to be regulated to manage residential property, and there's constant drip feeding of additional regulation. That will happen in the commercial field. The RICS is absolutely committed to ensuring that regulation does not come in, government regulation does not come in and interfere with the commercial sector. It wouldn't be good for any of us, landlords and managing agents and tenants alike. So that's why the RICS is doing this. This is why the RICS is taken so seriously. This is why the RICS is making the fourth edition of the code a professional statement. And on that, I shall finish.
That's fantastic. Thank you,
Peter. Any questions?
It's a very comprehensive overview, and obviously for what we can expect late summer, early autumn. We have come to the end of our time, but if you do have a couple of questions, anything that you'd like to just quickly raise with Peter, you're welcome to. Okay, would you just like to, Peter, just one?
Yeah.
When you talk about implementation March 2019,
yeah.
Is it backdated to the 1st of April 2018, or is it for any?
No, it's implemented. Well, a lot of people say, oh, you know, the problem that I've got is that if I've issued a budget under the old code, and then I'm going to have to issue a statement of actual expenditure based on the new code, well, you know, there's going to be problems. I think that's you know, that's one of those silly comments to make, because if you're complying with the old code of practice, complying with the new code of practice ain't going to be, you know, it's not going to be much difference. To be perfectly honest, no differences in professional statement. I think the big problem is that people who have issued budgets, for instance, where they've ignored the code, and then have to do a reconciliation based on the, you know, when it becomes a professional statement, they're going to have problems. So what we've done is, fortunately, because of the delay in producing and publishing the code, we've allowed 6 months implementation period, or we will, just for people to read it, you know, make sure they're up to speed with it and everything else like that. By then having it implemented full service charges commencing after March 2019, we actually avoid all the nonsense that invariably is going to happen for 2019 year-end service charge regs. Yeah, because people will start being silly. So we've just taken a sensible, pragmatic view and said, right, it's going to be implemented for all service charges after March 2019.
Thank you very much, Peter. I think we do need to close the session now. Before you leave, if you've got an opportunity to just complete your feedback form, that's always really important for us to capture ideas for future events. We always review them and take note of them. And if you please hand in your badges at the end of the room. It's not our BDO, so it's lovely. Thank you very much for coming, everybody.